Hello students, Assalamu alaikum. Today we are going to solve O-level accounts paper of MCQs, paper number 13. Uh, let's see our paper. This is our paper. Okay. October, November 2021, paper number 13. Okay, the other variant in November. Okay, now here comes our first question, and it says question number 1. Let's start. Okay, why does a trader calculate the profit of his business? To calculate interest payable on loan? I don't think so. To calculate provision for doubtful debts? No. To know the total expenses of the business? No. To know whether drawings? Now D option is left only. So yes, the correct answer is, getting my point clear. Okay. Now Hassan is a trader. Okay. Sorry. Hassan is a trader. During the financial year, he took goods from the business for his own use. How should he record it? Drawings debit, purchases credit, B option is the answer. Getting my point clear. Drawings debit and purchases credit. B option is the answer. Now, number 3. Where are the accounts of credit suppliers maintained? Obviously, purchase ledger. Okay. Which document does a trader issue to remind a credit customer that payment is made due? Statement of account. Very easy. Okay. What is a check counterfoil used for to record a check payment in the cash book? Okay. It's a record of to check payment. What are the payment we are making through the bank account? Okay. Number 6. Farooq sells goods on trade. A check from Khalid, the credit customer, was dishonored by the bank. So dishonored check means bank credit and Khalid debit. So C option should be the answer. Okay. Now, the Mello sells on credit. The terms of credit listed. List price $200. Multiply by 20 units. He purchased. Okay. Multiply by 20 units. Now, credit period is for 60 days and 15% trade discount is given if purchase is more than 10 units. So in this case, Samelo is now entitled to receive the trade discount. So 4,000 multiplied by 85%. That is 3,400 will be the amount of invoice. Okay. Again, see, 200 multiplied by 20, 4,000. Take 85%. 15% is off for the trade discount. Take 85%. So that would be 3,400. So B option is the answer. Getting my point clear? Okay. Okay. Jane purchased goods and paid by credit transfer. How should this be recorded in Jane's accounting record? Okay. If she is paying by bank transfer, it means B option should be the answer. Purchases debit and bank credit. Getting my point clear? Question number 8. Purchases debit and bank credit. Okay. What is shown in the trial balance? Trial balance is basically the ledger balances on a particular date. Okay. Now 10. At the end of each year, PT Limited transfers 20% of profit for the year to journalism. Draft financial statements were prepared for the year ended 30th September 2021. then discovered that the inventory at 30th September 2021 had been overstated by $1,500. Getting my point clear? Okay, in this situation, what we have to do, we have to be just keep your eye on journalism. If opening inventory is over, closing inventory is overstated, it means when we rectify this error of closing inventory, our cost of sales would increase, means a decrease in profit. When profit will decrease, the 20% of this 20% of the profit will also decrease. So there is only one option in journalism for the decrease, that is option B. So B option is the answer. Getting my point clear? This is how to answer this question. Don't worry about it, just think about journalism. Okay. Now, the bank column in a trader's cash book and the bank statement both showed positive balances. Okay. Positive means bank cash book is showing debit balance and bank is showing credit balance. Okay. Now, untraded checks 200, bank charges $10 not included in the cash book. Now, see. Uncredited check is recorded in cash book, not recorded in bank statement. Okay. $10 deducted from bank statement but not recorded in cash book. It means cash book is $210 higher than the amount of bank statement. Getting my point clear? So C option should be the answer. Okay. What is the reason for preparing sales ledger control account? What do you think there should be the reason? Okay. No. Not to calculate total sales revenue. Okay. Now, no, it has nothing to do with the timing. Nothing to do with income statement. Yes, D option is left. This is the correct option. Okay. Move. 13. Two companies each purchased a motor vehicle for 10,000 at the beginning of the year one. Company G used straight line method of depreciation at the rate of 15%, while company H used the reducing balance method at the rate of 20%. What was the difference in the depreciation charge between the two companies for year 2? In this question, we have to be careful. 10,000 multiplied by 15% straight line method means 1,500 per year. So again, year 1, because this is straight line method, year 1 is 1,500. Year 2, again 1,500. Done? Okay. Now, for reducing balance method, we have to be careful. 10,000 multiplied by 20%. Book value for year 1, after year 1, 8,000 multiplied by 20%, 1,600. So, company H amount would be $100 greater than the amount of G. Getting my point clear? H $100 greater for H. This is the answer. Okay. Now, Amit's financial year end of 31st December, the following account appeared in sales ledger. You see, account financial year end has come to an end, and this 1270 would be what? Mostly students will think that this is the balance carried down. No. This is actually bad debts or irrecoverable debts. Getting my point here? Why? Because they have not given the balance BD. Are you getting? They have just closed the account. They are not showing the amount for balance BD. That's why it is basically irrecoverable debt. Okay. Now, 15. Sally wishes to increase the balance on the provision doubtful debt. The year so okay. If we want to increase provision for doubtful debts, Okay. You have to credit provision for doubtful debts. So A or B option could be the answer. But when you are increasing provision for doubtful debts and you are creating provision for doubtful debts, you have to debit income statement. So it means A option should be the answer. Getting my point clear? Okay. Come to the next page. Question number 16. The following errors were found after a statement of financial position had been prepared. A loan repayment in 2 years' time had been included as current liability. A provision for doubtful debts should have been, when you create provision for doubtful debts, your current asset decreases. Now, when you are changing your current liability to long-term liability, your current liability is decreasing. Okay. Your non-current liability is basically increasing, and your owner's equity will also decrease. Okay. When you create provision, your profit will decrease. So A option should be the answer. Okay. Now, John maintains a full set of accounting record. Why does he also prepare a statement of financial position? This is the reason. To summarize, its financial position means they are asking about balance sheet. So this could not be the answer. This is not a checking. This could not be the answer. Okay. What business owns and what it owes. Very important definition for balance sheet. Don't forget that. Okay. Now, what are the advantages of operating as a sole trader? Now, in this question, the owner can keep all the profit. Yes. Okay. Now, the owner can raise finance issuing debentures. No. It's only available for joint stock companies. The owner can make decisions independently. Yes. The owner can protect by limited liability. Never. Sole proprietorship has unlimited liability. So 1 and 3 means option A should be the answer. Okay. Now come to the next question. 19. Anwar is a sole trader making annual profits of 24,000. He's earning 24,000. When he admits Dilip as a partner, they agree that Anwar would receive a salary and profit and losses will be shared equally. Okay. The forecast appropriation account for the partnership for the first year of trading, profit 50,000, Anwar salary 10,000. Now, how much Anwar will get after profit after salary is 40,000 divided by 2. It means he will get 20,000 from the profit. 10,000 salary means 30,000. He's currently earning 24,000. So his total income is increased by 6,000. Getting my point now? Okay. Now, Kasi and Ravi are in partnership. The financial statement for the year 31st August 2021 showed that Ravi was entitled to interest on capital, interest on loan, and was charged interest on drawing. What entries were made in Ravi's current account? First, interest on capital should always be credited. Interest on loan is going to be credited. Interest on drawing is going to be debited. So C option is the answer. Okay. Now come to 21. Okay. Ordinary share capital, retained earnings, and debentures. Okay. Equity and capital employed. Equity is, now when you calculate equity, so you have to include, these are the 2 items of equity. Okay. These are the 2 items of equity. So equity is 5 lakh, $500,000. Okay. It means the answer could be C or D. Now, what about capital employed? Capital employed means get the total of all the items. Long-term liabilities and equity. That would make 670,000. It means the answer is option D. Okay. Now come to question number 22. The issued share capital of CD Limited consists of ordinary shares. Retained earnings were 86,000 on 1st September 2020 and 88,500 on 31st August. Company's profit 26,000 and transfer general 5,000. Now we have to calculate what is the amount of ordinary share dividend paid. Now see, starting retained earning at start is 86,000 plus 26,000 profit. Okay, minus 5,000 general reserve minus closing balance of retained earning 88,500. It means they have distributed $18,500 as dividend. Okay. Now come to 23. A sports club was formed on 1st August 2020. During the year ended July 2021, the club purchased equipment costing 5,000, paying by check. In which of the club's financial statement did this appear? Receipt and payment and statement of financial position. Answer should be B. Okay. This non-current asset never appears in income and expenditure account. Only depreciation of this equipment will appear in income and expenditure account. Be careful about that. Okay, so the answer is B option. Come to question 24. Which is not a prime cost of factory manufacture? Oh, yes, supervisor salary, very easy question. The value of Thato's work in progress increased during the year. Okay, this was recorded in the financial statement. How did this affect the cost of production and cost of sale? Yes, when work in progress, closing inventory is increased, it means cost of production is decreased and cost of sales is also decreased. Okay. Now, what are the advantages of keeping a full set of accounting records? Okay. Financial statement will be free from errors? No, I don't think so. It is impossible to make fraudulent entries? No. Okay. More informed decision making is possible? Yes. Calculation of profit is more accurate? Yes. So it means 3 and 4. The answer is D option. Okay. Answer is D option. This is the answer. Okay. That provided the following information. Net asset, $28,000. On 1st January, 31st December, 24,000. Net asset means capital. Okay. So capital at end is 24,000 plus drawings 3,000 minus capital at start 28,000, 1,000 is lost. Yes. Very simple. 28. Roshan sale for the first year trading 55,000. Gross profit margin 20%. Closing inventory 3,200. Okay, this is the first year of trading. It means there is no opening inventory. So what were the purchases? Very simple. 55,000. 20% is profit margin means 80% is the cost. It means 44,000 is the cost of sales plus closing inventory 3,200. 47,200 is your total purchases. Getting my point clear? Okay, now come to 29. Which information is required to calculate the return on capital employed for a sole trader? Operating profit, non-current liabilities, and owner's capital. C option is the answer. Which is the best indicator of a liquidity? Yes, asset test ratio. Easy. 31. What was the trade payable turnover? Okay, trade payable turnover is very easy to calculate. Okay, trade payable at the end of the year, 42,000 divided, multiplied by 365 divided by credit purchases 319375, 48 days. Answer. Okay, come to now. A business provided the following information about its gross margin. Year 1, 40%, year 2, 38%, year 3, 35%. Gross margin is decreasing. Gross margin is decreasing. It means cost of sales is increasing, not decreasing. It has nothing to do with expenses. Quantity of goods sold is decreasing. Selling price is decreasing. This is the answer. Okay. What is not a limitation of inter-firm comparison? If we compare two firms, which is not a limitation? Business may have different sales price. This is not a limitation. Okay. Now, why would a supplier be interested in the financial statement of a credit customer? To know if the customer can pay what he owes. Simple. 35. The objective, what does the objective understandably assume user of financial statement will possess? When we make financial statements, whenever we make financial statements, we always think that those who, all the users of financial information have a reasonable knowledge of it. Getting my point? So that's all for today. Inshallah, I'll keep uploading other videos for my students as well. Hopefully these videos are very helpful for you. Okay, so take care. Allah Hafiz.